The Taiwanese index is up 200 points, while the Hang Seng is seeing cuts of around 113 points.
Now, SEBI has barred Subhash Chandra and Puneet Goenka to hold any key managerial positions in any listed companies.
The core CPI has not inched up but down a bit at 5.1 versus 5.2 in the previous month.
Bernstein speaks about clean energy being the new pillar of growth for Reliance Industries. It's a good opening for the market. 50 points straight off the back on the index. The sensex is up 160 points. MRF, case in point, 1 lakh rupees in terms of the stock price, 1 lakh crore market cap.
Challenge that I see in the renewable space in India is a lack of indigenously grown technology.
Sujay Kumar had really come in and brought a lot of change, and initiating change is always tough.
The entire up move that you're seeing today is being led by the consumer side of the market. It's a very marked and very decisive move.
I think of late we're seeing SEBI orders which are very clear and sharp in terms of what they're saying and what the data actually shows.
After a period of about 12 to 15 months, we've reached that point where the boards of both the companies have announced, have given approval for merger of these two entities.
The markets, what a stellar move today we are seeing on all the indices actually. Nifty is up 105 points.
Well, you're with us here on a fresh new edition of Closing Bell. That was a wrap-up of the day so far. We are coming to you live as always from the CNBC-TV18 News studios. I'm Prashant. With me, my colleague Surabhi and Nigel here in the studios. And I think Mangalam is with us as well from the newsroom floor. Guys, hi. Good afternoon. It's quiet, right? And it's been quiet since the morning. Although it's quiet in a good way. It's been up 100 points from the word go. And we still got about 100 points to show for it. So there you go. It's almost as if, you could draw a straight line. Nothing has moved very much. But before I come to the Nifty, I just want to start with the mid and the small cap part of the market, which is actually where all the action is. The mid cap index has made a new all-time high. It's powering away. Actually, mid caps are doing better than small caps, and that's it's a new thing. Small caps have outperformed mid caps by some margin recently. And for the small cap index, it's basically the 11th week of gains. The index, the last I checked, it was on your screen, 0.6% higher. So no problems. Nifty is having a slow day, as I said. And actually, it doesn't look like it's done very much, but this is the three parts. 50-point up move post-open. 11:30 to 1:50, absolutely no change. And then 1:50 p.m. onwards, there has been about a 20-30 odd dip, which as we speak is getting bought into. Now, the Nifty has got supports at the Friday's low, of which is 18,555. There is some distance between, that level and where we are right now. Below that's the 20-day. Bank Nifty's 20-day got breached yesterday, marginal, but today we are bouncing back a little bit. But the 20-day for the Bank Nifty is at 43,980, and we are roundabout there as we speak. US CPI later today, which will influence what the Fed, does tomorrow. And the market reaction here is on Thursday, as we've been pointing out. So, it's holding very, very steady. I don't think you could sort of be enthusiastic about mid caps and small caps, but I don't think the Nifty 100 points is anything to scoff at either. Surabhi.
Oh, absolutely. I take your point, Prashant, because what we've got is actually a very wholesome green day. I don't think too many people will complain.
Yeah.
Apart from the fact that we haven't followed through on, beyond that 100-point gap up. But otherwise, if you look at the constituents of that 100-point move, it's pretty well spread out. Consumer stocks are leading from the front today. Maybe it's the crude cooling off impact. Maybe it's the fact that you're getting some, spattering of rain around Maharashtra and Mumbai as well. But look at Tata Consumer, Asian Paints, Titan, ITC. The entire list is up and about. You're seeing some traction on metal stocks as well. Those are the gainers. The losers, by the way, barring SBI and Kotak, the other banks are not too bad off. Some of the other big names include JSW Steel from the metals pack. Tata Steel is finding some traction. I think people are still holding on to hopes of this China stimulus that is expected. And of course, Reliance has been a big contributor. But beyond that, really, the spark and the action, the traction, the momentum, call it what you want. Look at what's going on in the mid-cap market. There's a Liberty Shoes up 15-16%. Ramakrishna Forging, Jeevan. It's just an endless list of gainers. Macrotech developers, Lodha, 7-8% higher. Remember the company Electra Greentech It's back on the buyer's radar today, 7-8% higher. So some new names getting thrown in and pretty decent stocks as well. And these are well-tracked, large size mid-caps, if I could call it that. So it's a very vibrant mid-cap market and a reasonably wholesome is the word I went with, Nigel, for the large cap screen. But yeah, I guess Prashant's point is well taken that if you were hoping for the big push and the index breakout, well, looks like today we may not get too much of that. But it's Tuesday, so we have the financial services expiry. So
well, that's right. You know, it's getting tricky every day actually because you wake up to positive global cues and you can't buy the gap up. You have to look for that intraday dip, and then after that, the market doesn't do much on the headline index itself. The game pretty much is in the broader markets, and you know that's the way to play it. Now, this is the important index. Let's pull up the Nifty Financial Services Index. That's been range bound. It's moved to the lower end of the range, and I'm looking at the options data. Let's pull up the Nifty Financial Services Index. Yes, you know, that will be volatile, and that's the index you need to focus on for the next 55 minutes odd. I'm just looking at the options data. There's some writing being seen at the 19,450 call and around the 19,400 put. So the broad range, what you're looking on the downside is at around 19,370 because of the premium at around the 19,400 put. So keep an eye out. 19,370 is very, very important on the downside. And on the upside, if by chance we can get back up to around 19,465 on the Nifty Financial Services Index, then in fact, you know, we could see a breakdown. But important that we hold the lower level. Pull up that index, Nifty Financial Services Index, yes. So 19,370, 19,375, it's important we hold that level on the downside. And on the upside, 45 points higher, that's at around 19,465 odd. We need to hold on to that level. So just keep an eye out on that. If we break any of these levels, then maybe we'll see a bigger bounce. Mangalam, but it's been that sort of a day, right? Start off in the green, intraday dip, moving higher, but that actual knockout punch is not coming about.
The knockout punch does not come about, Nigel. It hasn't in the last few trading sessions, but it's interesting, you know, a lot of those people who would have invested in mid caps and small caps are looking at the capital gains that they're getting on those stocks. And with the frontline indices being range bound, they're just happy trading the options on the borders and eating the premium of the markets. But today what was extremely interesting is that despite the weakness that we're seeing in the financial end of things, it is Reliance which has put its hand up and now supporting the frontline index. So as you see, you know, the Nifty Bank is almost in the red, about 30 points up in the green, 0.09% holding up, and virtually closer to the lower end of today's trading session. But despite that, the Nifty has not given up much of its gains. It's still holding around that 18,700 mark. And what's the difference? It is Reliance. And that's interesting mainly because yesterday, all those who had written, you know, a bunch of the calls at 18,600 have been caught on the wrong side. They're covering their positions. And put writers are getting active at 18,700 and 18,650 as well. So that's telling you whether we go up or not, the supports have been moving higher from 18,450, 18,500 to around 18,600, 18,650 on the Nifty itself. And that's a big positive. Now on the way up, the only thing we'll have to look for is the previous week's high of 18,777 before we can go about the all-time highs. But no problems for the mid-cap end of things. We have the mid-cap index at a fresh record high as well.
Absolutely. Things are looking pretty you know, up and up there. Well, how should you position yourself in the last hour? Mitesh is with us with closing strategies. Mitesh, hi. Good afternoon. On the index, if there's anything you'd want to trade, or the bank's index, or should we go straight to stocks?
No, Prashant, we actually did take a trade on the Nifty. I spoke about it in the morning. Beyond 18,650, I think, you know, we suggested that the Nifty could possibly head towards 18,775. So a long trade is already in place with 18,600 as the stop loss, which now can be trailed to about 18,630, which is the open level. So just, you know, it's not a market which is still showing signs of expansion. So you will be slightly nimble in executing your trades. But broadly, I think, you know, given the fact that we've kind of crossed the midway pivot of 18,650, there's a chance that we might hit the upper end of the range, which is closer to about 18,775, 18,800. So on the index, maintain our positions. On the stock side, Chola Finance is a buy. Keep the stop at about levels of 1,075. And here look at targets of roughly about 1155, 1160 on the upside. And Cummins is a buy as well with the stop at 1814 for targets of 1880.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just pull up Macrotech Developers. The stock as it is was higher, but I think in the last few minutes, you know, Macrotech Developers, that's Lodha, that's moved up closer around 8%. Just take a look at it. Big move is what we're seeing on that one. Highlight a few more names Khadim India, that's another stock that suddenly moved up in the last few minutes. And Liberty Shoes as well. I'm not sure whether there is some news coming in on the shoe space or the footwear space, but both those two stocks, Liberty Shoes has moved up. You have Khadim India as well that's moved up. And Bodal Chemicals as well. That's another one that's up close to around 17%. So some of these stocks as it is were doing well, but they're building on the gains as we speak. Well, the mid-cap index on the whole has hit a record high with a whole host of stocks contributing to that big rally. In fact, Citi today has made several changes to its mid-cap portfolio. Vivek joins us to help us out with what are the changes they've made. Vivek?
Well, that's right. Today Citi's come out with a very interesting note and well-timed. Today the mid-cap index, small-cap index are at fresh record highs. So what they're saying is that the outperformance that the mid-cap index has seen, they're attributing it to two main factors. Number one, very strong FII flows on a quarter-to-date basis and very strong sustenance of flows into mutual funds, which they believe is going ahead and buying the small and mid-cap space. So now, going forward, what they believe is that if there is a sustained bull rally that we continue to see in equities, and if inflows continue into institutional DIs as well as mutual funds, they believe there could be further outperformance even from here on in the mid-cap space. However, one factor that they point out is earnings growth, which currently is lagging large-cap peers. They believe that could be the key as far as sustaining the bull rally is concerned. Remember, on a valuation basis, valuation premiums, both price to earnings as well as price to book, is something that is well above what the long-term averages are. Which are the 11 mid-cap stocks that they like at this point of time? There are some fresh additions to the list that they have. So the stocks that they've added today are ACC, Apollo Tyres, Carborundum Universal, Delivery, Mahindra & Mahindra Financial Services, PB Fintech, Soba as well as Sona BLW Precisions. Some stocks they have retained from the earlier list that they have, which is Devyani International, Gateway District Parks, as well as Mahanagar Gas. And stocks that they have replaced or booked profits in are Ashok Leyland, Crompton Consumer, Federal Bank, IGL, as well as Phoenix Mills.
All right. Thanks very much, Vivek, for that interesting note there. Mitesh is still with us. Mitesh, I just want to kind of revisit what you put out in the morning since we're talking about mid-caps. You had highlighted a chart, right? The Nifty Mid-Cap 50 Index chart. What is it telling you? If you can, I will pull that up for you, but just talk to us.
So I think, Prashant, the Nifty Mid-Cap chart, I think if you look at the recent price movement over there, there was a gap up which happened at the levels of 9,000. Now it was doing this range of about 9,000. And if you check the historical chart, you had a weekly closing of 89.36 on 14th of October 21 and an intra-week high of 9,002. Then you had a weekly closing of 89.26 on 12th of November 21 and with an intra-week high of 9,067. A weekly closing of 89.94 on the 2nd of February 22. And next week also we had a high of 9,042 and a closing of 88.40. So this level of 9,000 wasn't getting crossed, which was eventually done in the first week of May. And on the downside, you had seen on multiple occasions the Nifty Mid-Cap Index takes up around 7180, 7150 mark. So it was about 1900 point kind of a range. And now that's been broken on the upside. So you add 9,000 plus 1900, which is the range value. You get rough targets of around 10,900 to about 11,000. And if you extend it by 1.61 times the golden ratio, you get a possible target of 12,200. So very bullish pattern. The indicator setup is very good over here. I think it will be the mid-cap index, which will clearly outperform the Nifty. And therefore, trading should be slightly more biased towards the mid-cap stocks as well.
Okay, got that. That's worth keeping in mind, Mitesh. In fact, just for the benefit of our viewers, let me quickly remind viewers about some of the mid-caps that Mitesh has spoken about. The charts will just come up for you on the screen. And these are the stocks. AU Small Finance Bank. That's one of the stocks where he's seen that breakout. The other one is Prestige Estates. There is also Tata Communications, where we are seeing a very solid price action today. And the final one is Astral. So some interesting mid-cap picks coming in from Mitesh. Well, from technicals, let's move to fundamentals. Deepan Mehta of Lexer Equities joins in. Deepan, hi, good afternoon. Great to have you on as always. Everybody's just trying to wrap their heads around this mega mid-cap rally because, stocks are just flying in how. I'm seeing some of those shoemakers like Liberty get back at it. I think it was earlier in March when we had this absolutely insane shoe rally for a couple of days, and Liberty is back on the screens today. There's Lodha and so many others. Any new names, any interesting names that you've kind of added in the last couple of weeks or are thinking of adding to the portfolio?
Yes, Subi, thank you. Thank you for inviting me to your show. Now you're asking questions which require a very solid disclosure, and that the disclosure is that we and our clients have invested in it. So I've been very positive on the capital goods sector. We've seen the way stocks like Siemens, ABB, Thermax have rallied. But there are two stocks which come to mind, which are really specialist type of capital goods manufacturing companies. And they have thrived even when the rest of the industry was going through a lot of stress. The first name, of course, is Praj Industries. It's been our favorite for a long time. And it's a great play on India's ethanol opportunity. Recently, they've tied up with Indian Oil to even offer biofuel for aviation. And if that works out, then it's going to be a further opportunity opening for the company. They got great export potential as well. The second company which comes to mind and which has already rallied significantly and is trading at all-time highs is VA Tech Wabag. We all are seeing the way the weather patterns are changing and the ecological damages which are taking place, which means that water projects are front and central for every agency, private sector, public sector, government, state government. And this is one company which is sitting on an order book position of about 4 years trailing 12-month revenues, and amongst the best in class type of operating profit margins and return on investment. They have taken some hits in terms of doubtful debts, but that notwithstanding, it's a pretty asset-light business model, and they do get some revenues coming in from maintenance as well, which is more of regular in nature. So these are the two companies which come to mind. They're reasonably valued, but next 2-3 years looks exceptionally good for both these companies. So these are the two ideas which come to mind.
Okay, fair enough. And you've already put out the disclosure there that Dipan and his clients could have investments in these companies. But some ideas that Dipan is working with for the time being. We'll take a break on that note, come back on the other side. Ritu Arora of Allianz Investment Management will also join in the conversation.
Welcome back. Well, it's time for our daily dose of pharma. And we have Mankind Pharma as well as Gland Pharma. Both of them are doing well in today's trading session. A couple of brokerages are quite optimistic. Ekta joins us to run us through both those notes. Ekta.
Thanks. I'll start with Mankind. JP Morgan has initiated coverage on Mankind Pharma with an overweight and a target price of 17.30. According to them, they are one of the fastest growing domestic pharma companies, consistently outperform the industry, will continue to gain market share driven by factors such as a strong product portfolio, large distribution network, ability to build brands. Over FY23 to FY26, they have seen a revenue CAGR, or they expect a revenue CAGR of 15% and earnings of 22%. Bernstein has written on Gland Pharma. They have an outperform rating with a target price of 1,702 rupees. According to them, for market share for top 10 of their molecules are seeing some amount of recovery from a trough. They have spoken about specific molecules such as daptomycin, micafungin, enoxaparin, which all have seen market share improve in the recent months. Vancomycin, which is an antibiotic, has seen market share declining a little bit, and heparin, which is basically used for blood clotting, has seen some amount of stabilization in terms of market share. So basically, net, they expect some amount of stabilization or improvement in the top 10 molecules which Gland Pharma operates in.
Okay, all right, Ekta. Thanks a lot for that. Well, Dipan, what's your view on both these two stocks? Gland, which has been a big underperformer, and Mankind, which is listed, and wow, it's done quite well.
Yeah, I think that Gland Pharma really has been a major disappointment, and it showed a lot of potential, and the way the management was playing out their story, that it was something which they had a technological edge and very high entry barriers, and they had a moat around their operations, but that doesn't seem to be so. And now we are seeing very disappointing performance last couple of years, last couple of quarters, even longer. So at this point of time, only if you have a deep contrarian player, you can look at Gland Pharma. But Mankind, the new kid on the block, is looking very interesting. And it's the ideal pharma company to buy, given that there is so much of price erosion and competition in the global markets, especially US generics market. And the way the growth rate of the company, the track record has been, the aggressive nature of the management, focus on tier 2, tier 3 cities, and all of their brands are 15-20% cheaper than the other competing brands. Putting all of that in place, we're very, very positive on Mankind Pharma. Again, the disclosure here that we may or may not, we may be looking at investing in the company, although we haven't. And it is certainly one of the top picks within the pharma space. I would rate it even higher than Sun Pharma at this point of time, based on their business model and the kind of brands and the positioning of the company.
All right, Deepan, I won't ask you whether your investments are related to, the ease of pronunciation of the products that companies make, because on Gland Pharma, I was just reading Ekta's note and she's written daptomycin, micafungin, enoxaparin and vancomycin along with heparin. So cannot pronounce all of them, but what's easier to pronounce
She can pronounce it well, we can't pronounce it also.
Yeah, but what's easier to pronounce, however, is Pizza Hut. You're talking about Dunkin', you're talking about all these things, you're talking about Loda Builders for that matter. Devyani International, Vivek just told us that there would be some funds coming in on account of some inclusion in indices. Devyani International is up around 10% right now as we speak. Following it is Macrotech, the Loda Builders that are up around 8% out there as well. So in the QSR real estate space, what are your picks here?
See, I think Devyani has performed significantly better than its peer group, but all of these companies, I think, are in an interesting space. And I think last quarter, March quarter results are slightly disappointing because of some consumer demand being subdued. But look, these companies have a great long-term trajectory of growth. They are hardly scratched the surface when it comes to going deeper into the distribution tier 2, tier 3, and there's considerable scope to increase their network as well. And there's a shift towards these kind of QSR restaurants because of hygiene, because of taste changing, because of social media. So I think these companies, if you hold them for 3, 5, even longer, I would think that they could be huge corporations as they are elsewhere in China and in US, and add a lot of value to shareholders as well as to their consumers as well. So very positive on these companies, of course, but for good quality, you have to pay a higher P multiple. And that perhaps is the only compromise you're making at this point of time.
All right, Deepan, thanks very much for that. That's a big move on Devyani. And good discussion on stocks, as always, Deepan. And have a good day. We'll talk to you again soon. We've got the market, which is back up in 3 digits, 100 plus points. 18,705 is where the index is now at. Ritu Arora is Chief Executive Officer and Chief Investment Officer at Allianz Investment Management. Ritu, good afternoon. Great to have you with us here. Prashant this side. I was reading your views from one of the earlier interviews that you had given, and you, at that point, this is about a month ago, were sounding a little skeptical about valuations here. You basically were finding valuations in India a little too rich as compared to markets in the region. Where are things at now? If anything, markets have come up a little bit more, especially mid caps and small caps. What's the view?
To put it in right perspective, first of all, thank you so much. And to put my view on markets in perspective, I think markets are positioned at a point where one cannot call them cheap, Indian markets do not reflect the growth erosion we see elsewhere. The fact that the interest rates are heading towards a pause, but there's no pivot yet. And corporate earnings in India also see some kind of moderation. Hence, markets are poised at a level that I believe more than reflect the fundamentals at this point in time. But there are pockets, there are entry opportunities, there are sectors that do offer opportunities for investment. Overall, Allianz and we remain extremely bullish on India. We believe it's a sweet spot, a bright spot, and so strategically very committed to India.
Hi, Ritu. Good to speak to you. Nigel on this side. Out of the total money that you're managing, under the management, I think it's around $40 billion in entire Asia. Could you tell us what is the allocation to India as of now? And also incremental money, where does it find its way? India versus other markets.
So Allianz has a very broad presence in Asia in terms of businesses. In India, we have a joint venture, a very successful one with Bajaj Allianz, life insurance as well as general insurance. And the AUM that we have in India is over 10 billion. Overall, the money that comes in from overseas is also quite significant, and we invest in private debt, private equity, besides public debt, public equity, real estate through PIMCO. So we have a very wide footprint of investments, including impact investments and blended finance vehicles that we are developing, and then we have already made some investments also. So we are actually quite broad-based in the way we look at India.
Ritu, hi. I believe that, in terms of the global mandate, and that applies to the market here in India as well, the go green part of it, or sustainability, that seems to be a big focus for Allianz when you're looking at managing money. So when you apply that to the Indian context here, what are the opportunities that you're finding here in India, the valuations? There's a lot of, there's a lot of conversation. Reliance itself, there's so much going on. There's a lot going on the EV side of things as well. So how are you applying that to your investments here in India?
Sure. Allianz is a founder of United Nations Net Zero Asset Owners Alliance, and we've taken commitments to lower our footprint by 25%, investment carbon in investments by 2025 over 2029. So it's a very significant commitment that we have taken. So this we handle in two ways. One is, of course, deselecting and reducing exposures to those companies and businesses which are not so sustainable. And two is adding exposures and investments in sustainable, green, new age technologies, EV, etc. So we approach it from both perspectives. As I shared earlier, we've made our very first investments in impact, which focuses on EV vehicles, EV buses for corporate solutions, waste management, water management, etc. So, and I believe this is a very large evolving space for India. India as a country has made very significant commitments and is walking the talk and making very good measures and providing good incentives for this transition. This transition is an expensive transition, and public capital has to be supported and partnered with by private capital like ours. And hence, there are a lot of opportunities that are now developing for investments. You've named a few, but there are many more.
All right, we'd like you to tell us about the many more, Ritu. Also, while giving us a sense of how would you approach it, because it's relatively easier to distinguish between the good and the bad. What's difficult is distinguishing between good and better. Say, for instance, there is a company that is likely to grow at about 8%, but has a 7 out of 10 on the ESG parameter, whereas there is a company which is growing just about 5%, but has a 9 out of 10 on the ESG score. How do you approach that, and what then takes precedence? Just wanted to understand that thought process and the other areas that you're talking about in terms of opportunities.
The choices are usually not as difficult as you made it out to be, because we have realized and noticed and are very committed and understand that companies that are sustainable and transitioning to the right way of doing businesses are also more profitable. Our experience has demonstrated that in the long term emerge as winners. And this is not a new measure that we've started looking at green and sustainability. Allianz has been committed to this for years now, itself a carbon neutral company for decades. So hence, we strongly believe that fundamentally those businesses will survive and thrive, which are sustainable. So the choice is not as difficult as you may make it out to be. But if it were, then definitely, if it was a company which is low ranking on sustainability, we would not be very keen to invest in it unless there is a roadmap that is committed and demonstrated of transitioning. So for us, it is a very important criteria. It is fiduciary capital, and hence we are very much focused on generating market returns for our policyholders and shareholders, but not at the cost of doing business with companies that are not sustainable. So that is very much intrinsically woven into every investment decision, and the commitment is very deep.
Ritu, sorry, just to clarify, just to kind of get a sense, so you oversee investments across Asian markets, Ritu?
That's right. That's right. So we have presence in 12 countries.
Yeah, in India, this is through the Bajaj Allianz route, which also you oversee investments through that route into the listed. Sorry.
In Bajaj Allianz, as required by the law of the land, it's only through board. So we do not oversee directly investments. They have independent teams as well as board managed joint venture.
And that $10 billion number that comes under the Bajaj Allianz joint venture?
That's true. That is. And the 42 billion is rest of Allianz money that is managed through other Asian countries as well as European balance sheets.
I got it. Thanks very much, Ritu. Appreciate you joining in, and great conversation. Hope that this is the first of many, and we'll see you soon again. Thanks indeed.
All right. Thank you. A pleasure.
Ritu with Allianz give us some perspective.
I just wanted to point out a couple of stocks actually that are big moves, Prashant. KPIT Technologies, I don't know what's happened now. There's been a big winner. Remember, the stock has been moving just one way. In the last 5 minutes, I think, the stock has seen a sharp downtick. KPIT Technologies should come up for you on the screen. I'm not sure whether there's a large trade that's taken place, but suddenly we saw a big drop. It went down to around, I think, 1,070 odd, and it's seen a bit of a recovery from there. So just keep an eye out on that one. The other one is, I think, we saw a large trade even on Zomato. That's another stock that, there was close to around 55 lakh shares that changed hands in the last 10 minutes or so. So we'll wait by to see whether or not there is any parties that will be disclosed. But these are two of the notable names that saw a big volume spike just in the last 10 minutes. So wanted to alert our viewers on that one. By the way, pull up the Nifty Financial Services Index. It's around 3 p.m. now. And I think we're seeing a bit of an up move on that one. Though the higher level, 19,450 odd, we're very close to that mark. Just take a look at that. The Nifty Financial Services Index is doing its thing. The range that we're looking at on the upside is 19,465 approximately. So the bears, they have positioned themselves that we don't go another 20 points higher from these levels. Slip into a short break, but on the other side, as always, we'll get you an insight into what's going on in dealing rooms. Nimesh will be waiting for us on D-Street Chatter. We'll get our technical experts as well back with us to give us some buy and sell calls.
Well, it's all guns blazing for the market right now. We have the Nifty virtually at the high point of trade, led higher by Reliance, which has moved to the high point. Alongside that, a bunch of consumer stocks doing well too. Tata Consumer, Titan, both of them at the higher point of today's trading session. The Nifty Bank, which was meandering around the 20-day moving average at the start of the show, has now clawed back above that 44,000 mark as well. A bunch of that perhaps may have to do with the financial index and financial services expiry. But as always, we have Nimesh with us here in the newsroom. Nimesh, yesterday and today, the biggest difference is that yesterday we saw the dips being bought into, but the rallies were being sold into. Today, the rally has sustained. It's 18,700 on the Nifty.
So, Mangalam, if you look compared to yesterday, the big difference from yesterday to today is yesterday was all about mid caps and small caps. Yep. That's been the trend for the last many days. But today is clearly a day of large caps. It's largely a large cap driven rally, and that is backed by a very large FI buying. In fact, I understand there's going to, a leading sovereign fund is looking to increase the India weight, and hence there is a basket buying at the leading FI desk across the large cap stocks. So that's the reason why we're seeing 100-point moves on the Nifty. In fact, if you look at today's move, there's not a single sector which is dominating the moves today. It's all over the place, and a lot of individual stocks are doing good. So that's a big trend, and that's largely because of the large FI buying at the leading FI desk. About on the mid-cap index, well, the mid-cap index is at 1% at a record highs, but today the feedback is very small profit booking as well. So not every stock in the mid-cap is doing good today. In fact, a lot of the recent big movers are seeing a bit of profit booking as well. So don't just go away by the index level. Beneath that, there is some bit of profit booking as well. So just a word of caution. But the big difference is today's rally is largely backed by very large FI buying. And I understand, so as I said earlier, a sovereign fund is looking to increase the India weight. So that's a very good news. Maybe you'll see all-time highs very soon. But today's move is largely large cap driven.
All right, and that'll be good as well, because the last 2 days we've seen the FIs sell in our cash market, so them returning again would be good news. But individual stocks, what do you have on that little list of yours?
Well, it's a long list today. I mean, I've just picked up 4 stocks, but there was a lot of buzz and a lot of chatter among many stocks in today's trade. But the first stock on my list today is Capacite Infra. That stock off late is back on investors' radar. They raised money as well from some large investors. Today there was a large block, nearly 4.5% equity has changed hands. I believe a private equity investor was a seller, and a couple of large FIs were buyers in today's block. So disclosures could be important as far as Capacite Infra is concerned. So that's the first one. The second stock is Pidilite. After a long time, some bit of action is back on that stock as well. Large amount of buying interest from larger FIs. In fact, the company is meeting some large funds as well today, and there is a lot of interest from larger FIs. That's the reason why that stock is buzzing in trade. The third stock is AB Fashion. After a long time, some bit of up move in that stock as well. I believe the key reason could be the fact that there was a domestic PMS who was a seller. Looks like that selling seems to be out of the way, and hence that stock has reacted on the positive side. And the last stock is Minda Corp. Even in Minda Corp, the feedback is one of the domestic PMS was a seller. But again, that's a clean-out trade, and a leading domestic mutual fund has bought into today's block. So that's the reason why Minda Corp should be in focus as well.
All right, interesting list as always, and good to get that, Nimesh. Nimesh, in fact, earlier we were talking about how there are some personnel changes, on the fund management side expected at Motilal Oswal, PMS.
Yes.
Let's just talk about, what kind of holdings they have and how does that look, that portfolio look?
Sure, Prashant. So, as you rightly pointed out, there's going to be some changes for sure at the top level within the investment team at Moti PMS, and that's been talked about as well for the last couple of days. In fact, a couple of the chatter points which I spoke about were also related to the fact that some of the domestic PMS, which includes Moti as well, were large sellers in some of the stocks. So I just looked at the PMS, the three schemes, and the top holdings of these three schemes. So they manage the money across three schemes, which is Motilal Oswal Value Strategy, Motilal Oswal Next $1 Trillion Opportunity, and the Motilal Oswal India Opportunity Portfolio. These are the three schemes of mutual funds now through PMSs. Now, the first theme, which is the Motilal Oswal Value Strategy, that is managed by Vaibhav Agarwal. The top holding includes the names like IndusInd Bank, Zomato, Chola Investment, Global Healthcare, IDFC First Bank, AU Small Finance Bank, Axis Bank. So good amount of bank exposure, Religare, BEL, and MedPlus. These are the top 10 holdings in that particular scheme. If you look at the Motilal Oswal Next $1 Trillion Opportunity, this is the scheme where we're going to see a change of management, a change of investment manager as well. Currently, is managed by Manish Sontela. He's on his way out. The top holding there includes names like ICICI Bank, L&T Technologies, Kotak Mahindra Bank, ITC, Eicher Motors, SBI, Page Industries, Max Health, the names like Tech Mahindra and Bosch as well. And the last scheme is Motilal Oswal India Opportunities Portfolio. Even this is managed by Manish Sontela, and he's going to, and there's going to be a change in the management as well. That fund, if you look at the top holdings, IDFC First Bank tops the list. KPIT Technologies is one of the top holdings there. And after that, hitting an all-time high today, the stock is down 4% as well. TVS Motor is one stock. Global Healthcare, they own Paytm as well in a big way. Angel One is one stock that they own very, very aggressively. CDSL, APL, Apollo Tubes are the few mid-cap names as well. So, as I said, at least in the two schemes, there's going to be a change in terms of investment management, and that's the reason why some of those blocks are happening, wherein Moti PMS is a seller, and there has been a churn as well within the portfolio.
Got that. Thanks a lot for that, Nimesh. Very helpful data out there. By the way, the Nifty Financial Services Index, it's moved virtually to the high point of the day. But if it can get these other 10 points out of the way, the last 20 minutes will be very, very exciting from a bullish perspective. Nifty Financial Services Index, it just needs to move, get past that maybe 19,465 odd and hold above those levels. Positioning was such that we won't see that move. But that's clearly been the surprise element. And let's see whether or not we can end on the high. Now we move above those levels. So very, very important mark. We have got that 3 p.m. move and it's in the northward direction. Let's go across to Mitesh Thakkar. He's joining in to give us some buy or sell calls. Mitesh?
Yeah. So I have two BDST ideas, Nigel. DLF is closing towards the day's high. It's managing to get past the earlier swing highs of 497, 498. So keep a stop below 497.5 and a target of 512 for tomorrow can be looked at. And the other one which I like is Dabur. That's a BTST with a stop at about 556.5 for targets of 570.
There, Mitesh, with the rural recovery expected and the stock not having done well, it would be interesting to see whether they go ahead and increase their penetration into the rural markets, and that would reflect in their numbers too. But let's move on to the big story of the day. SEBI has barred Z promoters Subhash Chandra and Puneet Goenka from holding any key position in listed entities. Surabhi Sutaria is standing by at the big wall to explain all the developments out there and what it means for the company going forward. Surabhi.
There is a fresh setback for the Z-Sony merger as SEBI bars Subhash Chandra and Puneet Goenka from holding any key managerial positions in any of the listed companies. Now, this is a major setback as Puneet Goenka is slated to be the CEO of the merged company. Now, what has happened has SEBI has found that SL promoters have siphoned off funds from Z for their own benefits. And now, Subhash Chandra and Puneet Goenka are allowed 21 days to file their reply to this SEBI order. SEBI has highlighted multiple instances of poor corporate governance issues. They traced multiple transactions showing misuse of resources to pay off promoter dues. The first one being where Subhash Chandra provided a letter of comfort to Yes Bank for a 200 crore rupee loan to SL Group Mobility. This letter assured a fixed deposit of 200 crore from a group entity including Z. On the basis of this, Yes Bank adjusted the 200 crore rupee FD of Z against any such dues. But a large part of these funds originated from Z itself or any other listed companies. Now let's look at a flowchart of one such circular transaction. Now Z gave close to 8 crore rupees to Living Entertainment, which then moved to Khoobsurat Infra, which then moved to Spirit Infra Power. Similarly, another 9 crores moved from Z Entertainment to SL Business Excellence to Spirit Infra Power. Now, a total of 17 crores has moved from Spirit Infra Power to Pan India Infra to SL Green Mobility back to Z Entertainment. It can be seen that the Z money received from the SL Group company had originated from the bank accounts of Z itself. In another instance, SEBI flagged fund siphoning in SL Group's Shirpur Gold Refinery, where Shirpur Gold Refinery Promoter Group Company diverted assets worth 400 crore rupees from 2019 to 2021. Based on this, exchanges BSE and NSE were asked to review their consent to the Z-Sony merger. Now, what's next for Z? The company is reviewing the order, and CNBC-TV18 learns from sources that Subhash Chandra and Puneet Goenka have moved to SAT against the SEBI order, and the plea will be heard on June 15th. And finally, NCLT hearing is on June 16th, which will take note of all these latest developments.
All right, Surabhi, thank you very much indeed. Some very complex transactions there and some red flags that have been highlighted by SEBI. The story has moved forward already because Mr. Subhash Chandra and Puneet Goenka, they've already moved SAT, the Securities and Appellate Tribunal, against that SEBI order. So we'll keep tracking the developments there for you. But for the time being, back to the market, which continues to be in the thick of green. Jay Bala of Cash the Chaos is joining in. Jay, thanks for joining in. I think, last couple of weeks, the people here in India, at least, traders have learned to look beyond the index and they're busy making money in individual stocks. But you tell us, at the Nifty level, I mean, it's been tantalizing, right? 18,777. Today as well, we are back above 18,700. But what do you see lying ahead? Do you see any sort of an index action, a breakout at all?
Thanks for having me on the social. A couple of weeks back, now I've been reiterating that the markets needs to make one more higher high above 18,662, and that happened to be 18,777. And so far, the high has been lower than the all-time high of 18,887. So that's still not giving any decisive direction to the market in the short term. But so assume that in the absence of any breakdown, the market is still trying to push up. So if the market were to stay above 18,464, I think it's still trying to push up to further highs. But if 18,464 were to break down on the Nifty, I think that will be along with the Bank Nifty breaking below 43,300. That will put the bulls out of control. They'll be losing control and they will have lost steam. But as long as 18,464 is protected, assume that market is continuing to trend up.
18,464, that's the low that was made on the 1st of June. There was a turnaround and the market started moving higher. Jay, overall, how's the picture looking? I mean, in US as well, things have looked up. So let's just, before we zoom back to individual stocks and sectors here, just a bigger picture view as well.
Yeah, sure. We'll cover quickly both the Nifty and the US markets. The US markets, as I pointed out last time, the sentiment is extremely bullish, and so that's contrary and bearish. So, and it's got a little more bullish too. So, it's all, going into the key Fed meeting. This is not an okay sign for the bulls, but, as long as the markets aren't breaking down supports, the trend is still up. When it comes to the Nifty, if it were to break out above 18,887, there are two possible scenarios. Either, the higher high will be doing similar to what 18,887 did to 18,604, and basically it will be a trap. And the other alternative is the market continues to trend higher, say somewhere close to October 2023 to March 2024 in a choppy fashion, going, say, somewhere close to 19,500, back to 18,600, and back to record highs at 2,500. We'll deliberate on that if the markets cross 18,887. So basically, the VIX in India has also clocked fresh record low. But given that, it was the VIX's formula is such that it's calculating something 30 days out and not taking into account the weekly options and the futures, we might want to wait and see what the VIX is actually doing.
Okay, all right. Just hold on to that thought. The Nifty Financial Services Index is making that move. It's at the high point of the day yet again. And it's a perfect expiry that's playing out because there was writing that we saw till around 2 p.m. odd. And suddenly now the call writers, they'll be running for cover because we're going to, the last stick, in fact, is the highest point we've seen all through the trading session. Big up move. And that's what's helped, because there's some overlap between the Nifty Financial Services as well as the Nifty Bank. The Nifty Bank as well, a relative underperformer today, but that as well has taken a bit of a leg up. Well, Jay, let's squeeze in one more call. I wanted your view on crude. We are quite happy that crude prices have corrected from around $77, $78 or to around $73. I think you believe there's going to be one more bounce before we move down. Tell us more.
Yeah, that's right. The crude has been trending down and it's firmly down. But in the short term, we could see a volatile bump up somewhere close to 78, if not 82, and then, resume its decline. Basically, the medium-term trend for Brent is down. It needs, I don't think it's completing its move from the all-time highs until it touches somewhere close to mid-55s. So, basically, it's not easily tradable in the short term. Wait for either, a bump up closer to 78, 82 resistance before we can put on a trade.
5 on NYMEX, you said, right, Jay, if I heard that correctly?
Repeat that, please.
You said mid-55 or 55 thereabouts for NYMEX. So, I just had a question. Looking at this kind of a secular decline in crude, I mean, Brent has lost 40% from the peaks we saw last year. What do charts say? Is there any correlation? I mean, for crude to be breaking down in such a dramatic fashion, either there is a huge amount of supply that's hitting the market or there's a demand concern. Here it might be the latter. So I'm just wondering, should we draw any correlations with respect to equity soaring and crude falling so dramatically?
Generally, crude tends to, rally and fall along with equities. But, the last few months, it's been, diverging and going back to what it was doing in the 70s. Maybe, it's a stagflationary signal. I don't know. But, at the moment, it is still trending down and it could even go to mid-40s. But that's something out for the end of the year. So maybe it's either that the equities are going to catch up with Brent and come back to the existing correlations for the last 25 years, or it's doing something divergent than what it's been doing normally.
Yeah, I asked you because at least in my career, I don't think I've seen such a huge divergence between the way the equity market's moving and the crude market's moving. So interesting you pointed that out. Thank you. Actually, stay on, Jay. We have more questions. Don't go away. We'll take that break and come back, and the chat on technicals continues with Jay Bala.
Welcome back. A bunch of cash stocks doing extremely well right now. We have Nava, which is up around 8%. Remember, the stock has had a phenomenal month, up almost 30% in this month itself, and that's largely on account of the updates that have come in from the Zimbabwe regulatory authorities, easing the burden on their Zimbabwe balance sheet, Zimbabwe subsidiary balance sheet. So that stock continues to do well. We have Ramkrishna Forgings, which is surging as well as we speak, up around 7% odd. Mitesh had spoken about Dabur as a buy today, sell tomorrow call, perhaps on account of hopes that there would be some recovery in the rural markets. Imami, another FMCG company, has now moved to the high point of trade. And Tanla Platforms, that's really the stock of the last hour or so. It's up around 18% odd. The only worry is that, at some point maybe the up move that we're seeing in the small cap would go down the quality ladder as well. And that is when things will get a little shaky and we'll have to watch out for things then itself. Jay Bala is still with us. Jay, what are your thoughts on a lot of these cash stocks which are doing extremely well? Do you think, the small cap index outperformance will continue? Prashant had pointed out that they're gaining for 11 weeks in a row right now.
Yeah, that's right. Now, they've been doing a phenomenal job. Even if you look at some of my picks for the last several weeks, most of my small caps have done pretty well, and you named Imami and a few names here. I had pointed out that even the FMCG index, ITC is likely to take a back seat, and then the baton is going to get passed on to other FMCG names. So that's what is actually happening. ITC is slightly relatively underperforming HLL and Britannia and others from a short-term perspective. So, the price action is pretty much as anticipated. I think small caps are likely to continue a little bit more, but I think it might be close to the end of the stretch. So, a little bit of caution.
No, got that. You want to highlight more individual ideas, Jay? Positional ideas?
Cash name is looking pretty interesting here. I was anticipating when I know the stock to close above 73 as I speak to you, but it's somewhere close to that. If it closes above 73, I think it's forming a very bullish inverse head and shoulder pattern, and it's the likely potential for the stock is about 90 to 110. Yeah, and the stop loss is about 59. From the frontline name, top 3 IT stocks are still not looking good. So Wipro joins Infosys and TCS, and there is a short-term opportunity on the short side with a stop above 410 for a potential to about 340, 345.
Okay, Jay, just a view on the Nifty Bank as well. Actually, 2 sectors, if you could just an overall outlook. Banks as well as IT. Do you see any consistent patterns forming on either?
See, IT is the laggard here, and even with this recent bump up from April, the frontline names aren't doing okay. So there are multiple resistance between 30,300 and where the IT index is now. As long as 27,700 is protected for IT, I think it's okay. But the price action is not encouraging. When it comes to banks, watch the 10-year yields on the Indian bonds. If it were to close about 7.04 and 7.05, 7.09, that will end the rally for the bond markets, which saw a good rally from March to now, and a close about 7.07 would be a signal that the bond rally is ending, and that might have an impact on the banking stocks. As long as 43,300 is protected, the banking stocks are still trending up. But it's coming mainly out of strength in Axis Bank, HDFC, SBI are slightly underperforming. So watch out for the key support levels that I've mentioned.
Okay, Jay, we'll leave it there. It's a pleasure. Thank you very much for joining us and running us through the view out there. So 121 points or so is what the Nifty will end up by, which is not a bad outcome at all. I mean, so from the opening prices, I think we are going to end about 80, 90 points on top of the opening level from where you opened in the morning. So that's, and of course, there was a bit of an acceleration which happened, as you can see, in the last, I think, last couple of minutes of trade, last 20 minutes or so of trade. So that's basically the price action. 240 onwards, I think we saw a bit of an acceleration. We were at about 18,691 and we will end up at about 18,720. As I said. Now, banks, of course, they were kind of middling about, doing nothing, but picked up pace, ends about 170 point higher, the Nifty Bank. That's about 1/3% higher. So 3 days in a row, is the Nifty Bank has basically taken support around a very similar kind of level, just around the 20-day moving average or so, but we'll end above it after closing just marginally under it. Mid-cap index at a new high and the small-cap index gaining about 0.5, 0.6% once again today. Surabhi.
Okay, well, if we talk about the constituents of the move on the large-cap side, it was consumer stocks all the way. Consumer and actually some interesting large-cap names like Reliance also lending support to the bulls. The Tata Consumer is your big leader on the Nifty today. Asian Paints, Titan and ITC from the consumer pack keep it good company. Cipla managed to climb up the charts towards the second half of the session. So Cipla along with Divi's, these are 2 pharma names that have had a pretty good session, between 1 to 2% up on these stocks. There were some of the metal names that were shining, not bad on Tata Steel, 1.5% up. JSW Steel up 1.25%. Hindalco managed to put on some gains as well. And from the financials, ICICI Bank, Bajaj Finance, Bajaj Finserv, Axis Bank, these were some of the financial names that had a pretty good session. Some profit taking on auto stocks today. Bajaj Auto, Tata Motors, etc. But I guess, Nigel, the real headlines in the story, as usual, in the mid-cap market.
Well, and today it was the Nifty Financial Services Index that played out, and the last tick on the Nifty Financial Services Index is at the high point of the day. Beautiful move is what we saw. The majority of the session was quiet, but ended at the high point of the day. A few stocks to highlight. Tanla Platforms up 17%. Bodal Chemicals stock up more than 15%. Inox Wind Energy, not Inox Wind. That stock, in fact, up close to around 14%. You had Liberty Shoes as well that was flying away. And unusually high volumes on Bombay Burma as well. That stock as well was up close to around 10%. You know, you can easily highlight 20, 30 stocks that were up anything between, 10 to around 20%. It's that sort of a market, not Inox Wind. That didn't take the merger ratio favorably. Inox Wind Energy, that's the other one that will be merged with Inox Wind, which was up close to around 14%.
And if you own a small cap or a mid cap fund, it's just amazing, the rally, because
I should go check mine. What is my mid-cap fund doing? Thank you for that input, Prashant.
treat tomorrow, Surabhi. That's what it is doing.
It depends on when
Long-term investing.
Lunch on Surabhi tomorrow.
No,
it depends on when she started it.
It depends on when I started.
Because there's been a lot of pain for the last
That
few
is
years.
true.
But I'll take the lunch nonetheless.
Okay, folks, on that note, we call it a wrap on this edition of Closing Bell. Thank you very much for watching, but do stay tuned. Lots more coming up on the other side. Our Tuesday special Commodity Champions in just a bit.